Hey everyone, and thanks for jumping back into the Macroverse. Today, we're going to talk about the most recent FOMC, and we will also, of course, discuss the implications for assets like Bitcoin, and we'll also talk a little bit about Bitcoin dominance. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, fairly interesting FOMC today. They did drop interest rates by 25 basis points, which is what the market generally expected. I don't think anyone here is surprised by that. So you can see that the Fed funds rate is now at 4.75%. This represents a total now of 75 basis points of rate cuts. Now, that's a little interesting because, well, 75 basis points of rate cuts is actually what we got last cycle after the terminal rate was reached before the Fed paused for a few months. But again, this cycle, the terminal rate is much higher, so 75 basis points doesn't necessarily represent the same degree of sort of loosening of conditions that it would have potentially when the Fed funds rate was only at 2.5%. So there's a bit of a difference there, but the Fed was pretty clear. I mean, at least market probabilities were pretty clear that they would cut interest rates by 25 basis points at this meeting, and you can see that they have done so. And so when you look at the press release, obviously most people are going to first look at this line right here to see if they actually lowered interest rates or not, and they did. But what's more interesting is probably what comes 2 sentences after that, right? Where it says the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. So the reason why this is important for crypto is because it could still affect things like Bitcoin dominance. You guys know me, as it relates to Bitcoin dominance, my target was just 60%, right? So I'm satisfied, my maxi hat is off. I don't feel the need to be, as many of you guys might call it, toxically bullish on Bitcoin dominance, right? I'm not here to sort of dunk on the altcoin market at this point. I recognize that Bitcoin dominance will likely go down in 2025. But there's this other sobering reality that is worthwhile to at least acknowledge, and that is the fact that if you look at Bitcoin dominance and you look to see when it actually topped last cycle, it didn't top until QE began, right? If you overlay total assets held by the Federal Reserve, Bitcoin dominance in 2019 didn't top. Let me go to a weekly time frame here so we can actually sort of scroll further out, right? But you can see that dominance did not top during the QT phase of the bull market until QE began, right? Until the end of QT. Yes, dominance swept that high a little over a year later in QE, but the dominance rally was not over until QT ended. And so, for me, I do feel satisfied with 60% dominance. I don't really feel the need to see it go any higher. And in fact, at this point, I would argue it makes more sense to start planning for it to go back down in 2025 rather than trying to sort of squeeze out every last drop of Bitcoin dominance that you can. But for the purposes of academic rigor, I also don't just, I can't just simply say that there's no chance that it doesn't go higher. And there's 2 reasons why it could theoretically go higher, although there's plenty of data that suggests that it could top out soon. But the data that would suggest that it could go higher would be this sentence right here, the fact that they will continue to reduce their holdings of Treasury securities and agency debt. So QT continues, right? Quantitative tightening continues. They're not slowing it down either. And so because of that, right, it would make sense to still be open-minded to dominance going higher, even though it has hit the 60% target, right? And I think as an investor, we might put out predictions about things and they can come true. And then once they come true, I think it's fine to sort of flip your bias, but also to be open-minded to the idea that, hey, maybe your estimate was conservative and perhaps it'll go higher than you thought, right? So for me, I'm happy with 60%, but considering that quantitative tightening is continuing, I would be remiss if I didn't at least mention that there still is a chance that dominance just goes higher. And even if you just look at like the cyclical charts of crypto, if you look at like others divided by Bitcoin, so basically everything outside of the top 10 divided by Bitcoin, last cycle, it didn't even bottom until QT ended, right? And so the question is are we looking at this one here, this bottom, or are we looking at this one over here, which is what actually happened in December of 2020, right? So if you look at December 2020, or if you look at December 2016, right, if you look at December of 2016, you can see that others Bitcoin found lows then, right? You can see that pretty clearly that others against Bitcoin found lows in December of the halving year. So obviously it makes sense to look at that from the cyclical point of view, which does continue to play out, right? And I've said before, you might as well just defer to the cyclical point of view until proven otherwise. And if you look at the ROI from the bottom, Bitcoin's doing exactly what it always does, right? I mean, it's not that complicated. It's still doing what it always does. And if you look at the year-to-date ROI of Bitcoin, and you just simply look at 2024 compared to 2016, which is a popular comparison, it's following it pretty well. 2020 and 2012, we also saw Bitcoin USD go up in Q4. It's doing the same thing this time. So, you know, the cyclical view remains strong at this point. And so when you look, though, at something like others divided by Bitcoin, and you ignore monetary policy, right? I mean, we can see that it hit its actual bottom last cycle when QE began, but it also hit a higher low at the end of the halving year. This time, whenever it does bottom, potentially when QE begins, it might also happen to correspond to the end of the halving year. Wouldn't that be interesting if the low that occurred in September of 2019 when the Fed ended QT happens to be December of 2024, which is also historically when others Bitcoin puts in a higher low. So because others Bitcoin typically bottoms out in December, or at least a bottom, sometimes it's a higher low, but because it typically bottoms out in December of halving years, and you know, it just sort of broke down below these range lows, and because quantitative tightening is continuing, yes, it's possible. It's possible that Bitcoin dominance goes higher, right? You know, it could take out the target that I set. But there are ways in which dominance doesn't go that much higher, even if others Bitcoin does bleed back down a little bit more. And one of those ways, of course, would be that if ETH Bitcoin can get a bounce that is actually sustained, okay? I've said for a long time, I think ETH Bitcoin will bottom between 0.03 to 0.04. I've already started hedging, right? I mean, I think it makes sense to, you know, and I've talked about it a lot, right? When ETH Bitcoin was down here at 0.034, 0.035, I said, guys, this is a pretty good opportunity. In a year, you're probably not going to care, right? And even at 0.038, whatever, or 0.037, whatever it's at right now, is still a fairly attractive level. But the point is that no matter how much we might want it to bottom, and I honestly hope that it's already bottomed, because it's kind of miserable, right? Just watching it bleed, and everyone's like, oh, ETH is dead. And then, you know, obviously I don't think it is, but that's the prevailing sentiment. Until it crosses the 50-day moving average, then it still could go lower. And it's come pretty close to passing it, but it keeps not passing it, and it keeps getting rejected. And so I almost wonder if this rally here was sort of in anticipation of a potential end of QT, and then Powell just came out and said, guess what? QT still goes on. So we'll see. Look, with ETH Bitcoin, this has been a pretty powerful move. I'm open to the idea of it just bottoming out and potentially putting in a double bottom or a higher low whenever QE actually begins. But I also feel like I would be doing my followers a disservice to some degree if I said that had to happen, because we also know that last cycle, ETH Bitcoin did not find its actual bottom, right? It did not find the actual low for the cycle until QT ended, right? That was when it actually bottomed. It was when QT ended for the cycle, and you can see that occurred in September of 2019. And then ended up double bottoming in December of that year, and then in December of 2020, it still went down into December of 2020, and it put in a higher low. I do wonder if, you know, we could be going into sort of a phase like this, where sort of see how here in like mid-November, ETH Bitcoin got a little bit of a bounce, and then it went down again in December. I wonder if that's where we are right now, right? Because it's about mid-November. I wonder if that's what's happening, right? We're sort of getting that mid-November bounce. You can also see the same thing happened by others Bitcoin back then, right? If you look here, you can see there was a little bit of a bounce by others against Bitcoin in about mid-November. And so perhaps that's what we're getting. And then the final drop by others Bitcoin didn't actually start until December, right? It didn't actually start until December. And so I do wonder, right? I do wonder if that is what is the ultimate outcome here. That, because we just got a rate cut, altcoins are going to like that probably in the short term, just like they did last time. If you look at Bitcoin dominance, back in September, the last time the Fed cut, dominance actually cooled off for a little bit following the cut, right? So the last rate cut was right here, and right after it, dominance fell. And I think it made a lot of people think that the top was actually in. But if you were a follower of this channel, you knew the top wasn't in, or you at least felt like you knew. I mean, I felt like I knew the top was in. I could have been wrong, and I do get things wrong, right? I mean, I'm potentially wrong about ETH going home, but this is one of those things where, it got that move back down. A lot of people thought it had topped because loose monetary policy had arrived, but then a few weeks later, it then just went on to run to new cycle highs. One of my favorite charts for dominance is not this chart, right? Everyone looks at this chart, and it's probably because, I look at this chart a lot, and a lot of people on Twitter talk about this chart, just sort of the Bitcoin dominance chart where it's at 60%, including stablecoins. But the reality, and I think we could all do a better job of doing this is not the dominance that we're necessarily interested in. I don't care what Bitcoin dominance is doing with respect to USDT or USDC. I want to know what it's doing against the altcoin market. I don't care about the stablecoin market in the same way, okay? I'm not saying stablecoins aren't important. I'm just saying for the purposes of figuring out, whether to have cash allocated to Bitcoin or altcoins, or, what combination, you want to know what Bitcoin dominance is going to do with respect to the alts. And so this is my favorite chart, Bitcoin dominance excluding stablecoins, okay? And the way I see it is there's two likely paths. I've already sort of drawn them both out. So in the short term, the answer is it could go up or down. That's short answer, right? And you're right. Like that is the thing. And I said for years that it would likely top out here at the end of 2024. And all year long, we have shown this chart. And I have showed that it would likely hit this at 65%. And there it is. And I know a lot of people didn't believe it. And yet here it is. So I would argue there's two outcomes here. The two most likely outcomes. Outcome one is just that it sort of goes into a topping process now, and that 60% ends up being the top. Maybe it just kind of bounces around 60%, and then QE begins in, next month or in early 2025, and then it starts to go down. There does exist a scenario that we have to admit, whether we like it or not, right? That sometimes when you get these wedge patterns, not always, base case for me is just to assume that 60% is as good of a top as any, right? And 65% excluding stables. But there are some times when you get these wedges where they actually will break in the direction that you think they aren't going to, only to fake you out and then to go back in the other direction, right? So there is a non-negligible chance that dominance overshoots and then drops. The sort of the pieces of evidence that would support that is that, well, QT continues, my friends, whether we like it or not. That doesn't mean the altcoins can't go up. As long as Bitcoin goes up, the altcoins can run with it. And that's exactly what's happening now, right? I mean, a lot of these alts are moving. And as I've said, for even the altcoin market, especially going into the post-halving year, a DCA strategy is going to be the best strategy rather than trying to time the market. For the last 3 years, I've just said, stick with Bitcoin. But as we get closer to the post-halving year, I fully acknowledge that the altcoins could very well start to do well in 2025. And maybe, and as long as Bitcoin goes up between now and then, they'll likely follow along with Bitcoin. The main risk is, of course, if Bitcoin drops. So yes, if others Bitcoin drops in December and QT continues, which it seems like it is, then it is possible for dominance to overshoot. And one other piece of evidence to potentially support that view is all Bitcoin pairs, right? Because all Bitcoin pairs are still off their range low. So let's just pretend like we get a week or two where all Bitcoin pairs are starting to go back up a little bit because we got the rate cut, everyone's happy, everyone's feeling good. And then you get to December, and then before you know it, they're down here. If that happens by alt Bitcoin pairs, right? If that move happens, then Bitcoin dominance, excluding stables, is likely going to overshoot this wedge. Then everyone is going to feel like the altcoin market is dead just when alts start to outperform Bitcoin in the post-halving year. So I think it makes absolute sense to keep this view in mind. And I don't know which one's more likely to play out or not. I really don't. I'm not just saying that. I mean, sometimes I take bold positions on things like saying Bitcoin dominance to 60% and excluding stables to 65. But now that we're here, I don't really have a strong opinion. I think that it's going to do one of these two things. And the one way I think that it could stay below the wedge is if ETH Bitcoin bottoms. Because when ETH Bitcoin goes up, it's a huge headwind for Bitcoin dominance, right? Because the market cap of Ethereum is so much higher than the market cap of any individual altcoin. So that's an important consideration. Now, we got to talk about rates because, here's the thing. The 10-year yield, while it's down today, it's been moving up pretty aggressively, and it's moved back up to this level right here, okay? Now, there's a good chance that it could break out, right? I mean, Bitcoin just broke out of a very similar looking structure, right? Where it's putting in lower highs, and then it broke out. In fact, the 10-year yield did something very similar in 2023, where it then broke out. And then once it broke out, it ran for another month or two. And remember, I mean, my base case is that the dollar and the long end of the yield curve will rally into the end of the year, just like they rallied in the end of the year of 2016. Very similar conditions. Now, there are some differences, right? But I mean, you have Trump just got elected. The, year-to-date ROI for Bitcoin looks almost like a carbon copy of 2016 at this point for the last several months. The main difference is that we have an uninverted yield curve this time, and the unemployment rate has been moving up, not down. So in 2016, the unemployment rate was moving down. 2024, the unemployment rate is moving up. But regardless of that, the actual prices of things look very similar in terms of the directions that they're moving. So my base case is that the 10-year yield will break through here. And it's simply because the economy continues to run pretty hot. And the issue is that the more the Fed cuts, without any clear signs of a slowdown, the more the market's going to start thinking, well, why not? If you're going to keep cutting, then perhaps that's going to just fuel the fire for the economy. And if the economy goes back to getting pretty hot again, which it already kind of is, then you argue that why would the 10-year yield be all the way down here? I said the exact same thing, by the way, back over here. If you go back and watch my video from September, the FOMC, when the 2-year yield was at 3.5%, I said, guys, there's no clear and obvious. I think my video froze again. I need to get a new laptop because this thing keeps on freezing. But back in 20, I guess in August of 2024, I simply stated, I was like, look, guys, the 2-year yield is at 4.2%. But the problem with that is that there's no clear and obvious sign that the economy is crawling to a halt right now. And if it's not, which it doesn't seem like it is, then the most likely outcome is for the 2-year yield to get a really large bounce here. And so it has. And it also, of course, we saw yields bounce after the election in 2016 as well. And the dollar went with it. And I said back then, if the long end bounces, which is my base case, you're likely going to see the dollar bounce too, because it tends to follow the yields. And here it is, right? It's been bouncing. And I said, likely going to get one pullback going into the election, and then another bounce higher. And I still stand by all that, right? I think that stuff will continue higher into the end of the year. And I think it makes sense, right? I mean, the Fed doesn't really control the long end of the yield curve. I mean, the short end they control, right? I mean, if they cut, the short end of the yield curve it's going to go down especially if they advertise a lot of future cuts. The short end of the yield curve will react to that. The 1-month Treasury yield can't be that much different than what the Fed funds rate is, right? Because it's just 1 month out. And you can see it's pretty close, right? The Fed funds rate's 4.75%, and the 1 month is 4.572. But the 10-year is 4.339. And it's been moving up. It's been moving up, right? The Fed can't can't cut that if they're cutting prematurely, which there is a chance that they are. I know Powell seems convinced that they are above the neutral rate, but the evidence in some parts of the labor market suggests that they're correct, but there's other parts like initial claims that would suggest that they're incorrect, right? I mean, if it's truly restrictive, then why are initial claims still at 200K, right? I mean, perhaps it's the amount of time the Fed stays in restrictive territory, but you do have to wonder, do they run the risk of cutting prematurely? And so, if you actually look at the S&P, back over here, when it was when the 10-year yield was rallying, you can see that the S&P went up as the 10-year went up, but then after it broke out, that was when the S&P then got a correction. So again, here the S&P has been going up as the 10-year has been going up, but if the 10-year breaks out here, then it could correspond to a correction by the S&P 500 again. So I would watch that going into the end of the year, because that does seem like an likely outcome. It's not an immediate thing, right? It's going to take some weeks to play out, more than likely, because first of all, it has to break out, then it likely has to back test it like it did over here for a week or two. But if it does that, then you might get a pullback by the S&P later on this year, potentially in December. But yeah, I mean, I think that it's really interesting to see that. And one thing to look at is actually the 2-year yield. Or sorry, I want to look at interest rates minus the 2-year yield. And if you look at that, you get a chart. And I've talked a lot about this chart. And the reason why I talk about it is because there are times, right? I mean, there's only been 3 times where it's really hit this trend line. And you have one example in 1989, another example in 2008. And in 2008, it was an immediate recession. But in 1989, you didn't have a recession until a full year later, right? And it tagged this trend line in August. So there's a chance that you get a recession, but it could still be a year away, right? If the 1989 comparison is at all relevant. But still worthwhile to watch this sort of stuff, because the interest rates will likely continue to come down, and there's a good chance that the 2-year yield will continue to go up. Okay? So if that's the case, then this is likely going to keep going down. So I would certainly keep an eye on that. I guess sort of the elephant in the room for all this stuff as it relates to the altcoin market. And again, at this point, my maxi hat is off, right? I'm not suggesting that you should assume that Bitcoin dominance is going to go much higher, even though I could easily lay out a case that it will. And I'd say there's at least a 50% chance. It's probably a coin flip at this point, but there's definitely a chance it goes higher until QE returns. But one of the things to think about is how do we get to what you would consider an alt season where altcoins start to outperform Bitcoin? Well, if the last cycle is any indication, then we would need to see quantitative easing. But the elephant in the room is that how can the Fed pivot to QE if the S&P keeps on putting in new all-time highs and if Bitcoin keeps on putting in new all-time highs, right? It just seems like if the markets are going this way, in this direction, then how can the Fed begin QE? It just seems like they might run the risk of inflation coming back. So what happened last time was the economy really started to show some worrying signs. And that is when the Fed actually pivoted to QE. And I mean, the market, the S&P still went up, but crypto showed some weakness around that time, right? Crypto was still not doing that great, which is in stark contrast to this cycle where Bitcoin is putting in new all-time highs, where the altcoin market is not. So it's almost like Bitcoin has sort of entered into, and it's always been this way, but I mean, arguably Bitcoin is in a league of its own, right? Bitcoin and crypto are not actually the same thing. Bitcoin operates with different properties than the altcoin market does. And so one of the things to think about is, you would have to, for QE to come back under the current inflationary backdrop that we have, you would likely need to see some correction in the market to make the Fed feel like, all right, they should start QE, right? And there's not really a lot of great examples of that. And I'll be honest with you guys, my strategy when it comes to the S&P is just to DCA low expense ratio index funds. I don't make it any more complicated than that, because over the long haul, the S&P goes up, not down, right? If you're constantly betting on it to go down, you will be disappointed because it generally goes up. But occasionally there are drops. And there have been some charts I've looked at, like, the S&P divided by the unemployment rate squared. And it is interesting to see that the S&P divided by the unemployment rate squared is back up to this trend line right here. And so we'll see if it can break through it this time. I think Bitcoin already has, so I'm not saying it can't, but that's where it is. The other thing to look at is the S&P divided by M2. Now, this is a chart that I find really interesting because a lot of these structural support levels and resistance levels remain intact even decades later. For instance, the low that this bull market really began off of, where sort of the final stages of it started were in 1996. It started right here, and you can see that in 2022 it started at the same place. And then the S&P divided by M2 rallied to basically exactly where it is now. In fact, a little bit higher, right? If the S&P were to tag 6K, it would be at that same level. And then the S&P got a sharp sell-off, right? Back to where it was, a year before. But the bull market still wasn't over, even though it got that correction, even though it got a 20% correction, it probably felt like the bull market was over, but it wasn't, right? I mean, the market then went up from there and then rallied another 50%. So, look, this stuff, easy to find, right? I mean, it might feel like it has to play out the same way, but the reality is it very well might not, right? And if you're looking for it, you're going to find it no matter what. No matter what's going on in the market, you're always going to find something that's worrying, right? But again, markets climb the wall of worry. My only point is to say, because I want to talk a little bit about ETH here, is that I put out a video called, Ethereum going home. And obviously, I know there's going to be a lot of criticism around that, but it has been my view all year that it will bleed back down to the lower logarithmic regression trend line. At this point, just to be completely honest, right, I am actively betting against that idea because with ETH Bitcoin having gone to 0.034, 0.035, I think it makes sense to start hedging and to not necessarily count on that. And mentally, I am getting exhausted waiting for it. And because of that, I think it does make sense to start actively betting against it, right? Saying, like, it could still drop, but it does make sense to actively bet against this idea because, I don't want to just be sitting around next year if ETH is at all-time highs, still saying it's going to go home. So for me, it still remains a possibility that it will go home in December, which is when I said, right, April, August, December. That was the same thing in 2016. You had the major capitulations April, August, and December. But I also want people to know that it does, I think, make sense to start hedging. And I will continue to say that. It does, because no one knows what's going to happen in the market. What I have previously said, though, is that in 2016, Bitcoin went up and ETH went down. That is obviously not happening now, right? If Bitcoin goes up, ETH is following it. And that, I always express concerns about that view. It seemed to me that if Bitcoin's going to go up, ETH was going to go up. And if Bitcoin goes down, ETH goes down. That's what's happening, right? If Bitcoin goes up, ETH goes up. So the only way, right, that I can see ETH actually dropping back down here by the end of the year is if you get a broader sell-off in the market, right? A sell-off that is, looks kind of like what you got over here in 1998, which is also, by the way, when the Fed cut from 5.5% to 4.75, which is exactly what they just did. Again, I'm not trading that idea. Like, it's not like I'm actively going out and selling all my stocks and being like, well, this is going to happen, because there's a bigger part of me that thinks it probably won't happen. But I'm just pointing out the only way that I feel like ETH would actually go home at this point is if there's a larger correction in the overall market. Because if there's not a larger correction in the overall market, then Bitcoin's not going to go down, right? If the S&P keeps going up, Bitcoin's probably going to go up. If the S&P goes down, then Bitcoin probably go down. If Bitcoin goes down, then ETH would go down. And if ETH goes down, then alts go down. So that's kind of where I am right now. And, it's always been about this idea of looking at sort of these breakouts before, where Bitcoin had a very similar breakout back in 2020. And then it rallied for a few weeks, and then we had sort of a pandemic crash. I don't really think it makes sense to bet on that idea. I think it makes more sense to just ride the cyclical view of Bitcoin. Looking at the ROI from the low, you can see that Bitcoin's doing what it always does, right? So I'm not going to fade it, right? I will just happily continue to hold my Bitcoin in hopes that it continues to follow the prior cycles. But if there is a correction in the S&P, it probably would affect Bitcoin. And if it affects Bitcoin, it would affect ETH. That's the only way I can see ETH going home. I know this video isn't about ETH, but I also know a lot of you guys have followed the views, and I know a lot of you guys were happy that ETH Bitcoin finally went to 0.03 to 0.04 and have already started to hedge, as I have, right? But in order for it to actually go home, there would have to be a larger correction in the market, which right now doesn't seem the most likely scenario. My best guess in the short term is that, the markets will still like the interest rate cut here for at least a couple more weeks. And then they might stall out again just before the unemployment rate stuff that comes through in December. That's my best guess. If the unemployment rate is okay, then Bitcoin is still likely just going to follow the cyclical view. And I said the same thing last month. I said if the unemployment rate stays low at like 4%, 4.1, then Bitcoin's probably going to break out to new highs and go with the cyclical view. And it has. I'll say the same thing about December. If the unemployment rate comes in low again, then Bitcoin will likely again just defer to the cyclical view, and you don't need to overcomplicate it. But if it comes in really hot again, and the unemployment rate becomes something that people are concerned about again, and you do get a brief sell-off, that's the only thing I can think that would actually take ETH home at this point. So just to be brutally honest, right, I am getting mentally exhausted with the idea. I do think that with ETH Bitcoin at 0.03 to 0.04, it absolutely makes sense to hedge those views and to not necessarily count on them. Not all the theories I present are going to come true. Hope you can forgive me for that, and understand that I can't possibly know everything that's going to happen. And I do get things wrong quite a bit, really frequently, in fact. But that's the only way. And that's also the only way you're probably going to see the Fed pivot to QE, is if there's a correction in the market. Because if there's not, what incentive do they have to pivot? What incentive do they really have? If the markets keep screaming to new highs, why would they? So because the markets just keep on moving up, and because Bitcoin is still following the cyclical view, then just riding the seasonal pattern seems like the most obvious answer. And, we'll see what happens later on in November and December, but that just seems like the most obvious answer right now. With Bitcoin dominance, I know, I know, I mean, this could be the top, right? 60% was always the target, and that could be it. But just keep in the back of your mind that if there is one final move by dominance into the end of the year, then we could still see dominance drop in 2025. So that mostly summarized, what's coming out of the FOMC today and how it relates to things that you're probably more interested in, like, different cryptocurrencies. My portfolio is still mostly just Bitcoin, but I have started hedging with ETH a little bit here, even though it does go against the view of what I presented of it going home, just because 0.03 to 0.04 does seem attractive. But we'll wrap it up there, guys. Those are my views. We'll see what happens going into the end of the year. And hopefully Bitcoin can just follow the seasonality for the rest of the quarter. If there's any reason for it not to, we'll talk about it. But at this point, it just continues to follow that trajectory. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.